We have just concluded the last trading day this Holy Week, Wednesday, April 17, 2019. This is going to be the last video for this week. My name is JC De Guzman and I'll be talking about Bloom, RLC, Now, CHP, MRC, MEG, JGS, VITA, DNL, and PXP. So I'll be talking about my technical analysis, overall sentiment, and trade setups or recommendations for these 10 stocks. We will be talking about the price volume distribution of these 10 stocks as well. Let's begin with Bloom. Bloom closed on Wednesday at 12.60. The immediate support is pegged at 11.12. Resistance is near 12.96. We can say that's already 13 pesos per share. For the past few weeks, we have seen Bloom going up and uh, going up and down on its position relative to the 10-day simple moving average. But as of Wednesday, it managed to cap the this week with its price moving above the 10-day simple moving average, also of course above its 50-day simple moving average. And this today's ascendant price is higher than its volume weighted average price of 12.43. It also wrap up the week or wrap up the day with a volume above its 10-day volume average. So all of those parameters that I've mentioned are bullish signals. However, the two green candlesticks that we have witnessed for the past two trading days, Tuesday and Wednesday, are not enough to make MACD cross above the signal line. As we have seen the MACD bent upwards, but as the signal line goes up, or as the MACD line goes up, the signal line goes up as well. So this only shows that Bloom has to break out above 13 pesos per share. When that happens, by the time that happens, MACD should be moving above the signal line already, or will have moved above the signal line already by then. Historical volatility is 49%, a low risk level for Bloom. This sideways movement between 11.12 and 13 pesos per share started in the second week of February this year. So as the price of Bloom draws closer to the resistance, we should see a significant amount of volume with consistency above the 10-day volume average. Otherwise, you know, we might just see Bloom going up and down, bouncing up, bouncing up and down from these support and resistance levels. So if no consistent volume above the 10-day volume average will be spotted as it draws closer to 13 pesos per share, Bloom might just move sideways. So that's the probability in relation to the registration of volume of Bloom. Let's take a look at the price and volume distribution of this stock. So the most traded and most voluminous range is registered between it's between 12.12 to 12.28. I'm not going to include the 12.08 or the trade distribution chart because volume wise it did not gain a significant amount of volume. Okay, so the most traded and most voluminous range is between 12.12 to 12.28. That's closer to the intraday low, by the way, than the intraday high. So despite the appearance of this green candlestick for today, we have seen that the most voluminous, most traded range is closer to the intraday low than the intraday high. So that does not give us a perfect 4-point score for the four criteria that we need to monitor. So we just got 3 out of 4. So meaning to say, my overall sentiment on Bloom remains neutral. So it might just move sideways between the support and resistance levels. Consolidation phase, consolidation um, scenario on Bloom. My recommendation is that you sell your position once it draws closer to 13 pesos per share. Okay, lock in some profits there, and then wait for a pullback near 11.10 before you reevaluate the scenario to see if the four criteria are already present by then. Okay, next we have RLC. Robinson's Land Corporation closed on Wednesday at 24.30. Support is at 22.8. Resistance is at 24.78. It closed above its 10-day SMA and above its VWAP of 23.90. Volume above the 10-day volume average is also spotted. Even though MACD is still moving up below the signal line, it has already changed its direction, showing as a formation of a bullish convergence with the signal line, but it's still far from registering a crossover above the signal line. I think that will only happen once we see a breakout of up 24.78. Okay, historical volatility. On before that, foreign investors sentiment is they actually did not for 2019 year to date. It's net foreign buying for RLC. So foreign investors are bullish on RLC for 2019 year to date. By the way, I did not cite foreign investors transaction on Bloom a while back. So for 2019 year to date, foreign investors are net foreign sellers. They are bearish on Bloom. Now let's go back to RLC. The historical volatility of RLC is at 46%, a low risk level. Now let's check the price and volume distribution of RLC. The most traded and most voluminous range is between 23.15 all the way to 23.7, still closer to the intraday low than the intraday high. Green candlestick, it closed above the VWAP. Volume is above the 10-day volume average, but the most traded, most voluminous range is closer to the intraday low than the intraday high. We just got 3 out of 4. Therefore, my overall sentiment on RLC is sideways. So it's possible, it's more likely for RLC to just bounce away once it hits 24.78 or 24.8. So just trade the range. Trade 22.80 to 24.78. Short-term traders, FYI on that. Once you have locked in some profits near 24.8, wait for a pullback near 22.8 to 23 pesos per share. Okay. Next we have Now Corporation. Now Corporation closed on Wednesday at 2.44, just 6 centavos away from breaking out above the resistance at 2.5. Support is at 1.98. So we have seen a spike on its volume for the past 2 days, Tuesday and Wednesday. And foreign investors bought 20 million pesos worth of shares last Tuesday. And this green candlestick is unfortunately below its VWAP of 2.52. Closing price is 2.44, FYI. So as early as now, we just got 2 out of 4, 2 out of 4, or 2 out of 3 criteria present from the 4-point criteria that we are checking. So let's take a look at the price and volume distribution now of Now Corporation. The most traded range, it appears that the range that got the biggest volume, the highest number of trades it looks like it's evenly distributed by the looks of this chart. So it's really quite challenging to identify the most dominant one. But if we are just to base it from the length of these bars, I would cite this one between 2.44 to 2.56. That's the most dominant range. Still, it's closer to the intraday low than the intraday high. For the new subscribers, FYI, this price at the very bottom is the intraday low, 2.36, and 2.75 is the intraday high. This is the position of the intraday high. Okay, so that makes my overall sentiment on now as I'm still bearish on now, despite the appearance of this green candlestick for Wednesday. I'm still bearish on now. Uh, I can still sense, based on the data that we have, the possibility of the price bouncing away from 2.5. So it might just retrace 2.0. But let's see on Monday. Let's see on Monday if traders would want to um, buy Now Corporation at a price higher than 2.44 or maybe above 2.5. I might change my sentiment on Monday if traders would sustain the ascent in price of Now Corporation. But for now, I am bearish on Now Corporation, as can be seen by the price volume distribution for this stock. So my advice for those, I do hope none of you have Now Corporation. But if you do, by all means, sell once your trailing stop loss is hit. And just in case you disobeyed your trailing stop loss, please make sure that you sell a few tranches every time Now Corporation breaks out above a certain resistance level, starting with 2.5, followed by 3.18 or 3.20. Those who don't have Now Corporation, don't rush. Let's observe Now Corporation for the meantime. I still don't see any solid signs of reversal. None yet, none yet. Okay? Next, we have CHP, cement stock. So CHP closed on just Wednesday, rather, at 1.88. Support is at 1.62. Resistance is at 2.21. It break out. Oh, let's see. Did it close above VWAP? No, it's equal to its VWAP of 1.88. Unfortunately, volume is not above the 50% of its 10-day volume average. So I think it's just about 10 or maybe 15% of its 10-day volume average. So the 4-point criteria is no longer perfect. Besides, MACD is still bearish. Historical volatility is at 111%, an extremely high risk stock for CHP. A lot of new subscribers of Equilist Analytics who were former subscribers of another service provider have asked me, sir, what do you suggest about CHP? This was recommended by another service provider when it was priced in around around what? Above 10 pesos or above 11, close to 12. And up until now, they're still holding onto their position. Well, my suggestion is that you should sell on strength. What does selling on strength mean? It means selling every time the stock hits a significant resistance level, just to minimize your losses. I said minimize your losses, just to minimize. I did not say to break even. Okay, so that's the purpose of selling on strength. So in the future, please respect your trailing stop loss. Now that you are with Equilist Analytics, I do hope you remain consistent in following your risk management system when it comes to trading and investing. And in this video, we're talking about short-term trading. Okay, do not justify your mistake by saying, oh, I'm long-term with this particular stock. I'm long-term. I'm into long-term investing anyway, so let me just average down. No, do not console yourself by trying to convince yourself that you are a short-term trader turned long-term investor. Okay, that transition should happen even before you acquire the stock, not once the stock is already in your portfolio and things are not happening according to your expectations. So don't fool yourself. Okay, we're done with April Fool's Day, so move on from April Fool's Day. So you have to sell on strength if you still have this CHP as recommended by another service provider. Okay, and these are the resistance levels: 2.21, 2.88, 3.61. 2.88 is a strong resistance level of CHP, and as we can see here, this stock has been having a hard time breaking out above its 10 SMA. See the consistency? It has consistently failed to cross above 10 SMA, the candlestick relative to the position of the 10 SMA. Okay, I hope you're looking at on my mouse. It's moving. Okay, so I'm bearish on CHP, but let's take a look at its price volume distribution chart here. So the most traded and most voluminous range is between 1.87 to 1.9. 1.87 to 1.9. It's a tie. It's a break even between the but considering this 1.86 here, then I would give the point to the bears on CHP based on my price volume distribution analysis. My overall sentiment is bearish. I hope none of you have CHP, and if you don't have it, snub it for now. Snub it for now, or keep it in your watch list. Okay, let's wait some more for a better price, a better position on CHP. It's still more likely to to continue its downtrend. Okay, this could be some fake bounces. So let's continue monitoring CHP. So don't buy it just yet. Don't buy it just yet. Next we have MRC. MRC closed on Wednesday at 0.35. Support is at 0.33. Resistance is at 0.41. It respected its psychological bottom at 0.33 as it bounced up and closed at 0.35, which is also higher than its VWAP of 0.34 on Wednesday. Volume looks good. It looks good above the 10-day volume average. For 2019 year to date, foreign investors are bearish on MRC. MACD remains bearish as well. Historical volatility is moderately high at 63%. It's a moderate risk for MRC already. Let's take a look at its price and volume distribution chart. So the most traded range and the most voluminous and most traded range is between. It's quite balanced, huh? It's quite balanced. So it's if we are to identify one, that would be 0.345 to 0.35 on the volume distribution chart. But on the trade distribution chart, that's 0.335 to 0.34. Again, on the volume distribution, that's 0.345 up to 0.35. On the trade distribution chart, right here on the right side, it's 0.335 to 0.34. So there's a tug of war. There's a tug of war between these two charts of the price volume distribution analysis. So that makes me still bearish on MRC because of that tug of war, seemingly tug of war on the end. There's an indecision when there's a tug of war between the sentiment of traders, buyers and sellers. So there is an indecision. So the majority is not yet willing, so to speak, to to really deep dive into an aggressive buying phase for this particular stock, so to speak. Okay, so let's see if there will be some continuity on Monday, and just in case the four criteria will become present on Monday, then at any time we can do a test buy. But for now, I'm bearish on MRC. My recommendation is that you stay away from MRC for now. Stay away from MRC for now. There's still a possibility of it breaking below 0.32. If the market will prove me wrong on Monday, then we can still do a test buy. Anyhow, we still have this 0.487 here, this resistance level here, as our potential reward. Should we pursue to buy MRC above 0.35 on Monday, we still have an attractive reward to risk ratio. Okay, next we have Mega World. Meg closed on Wednesday at 5.69. It's lower than its VWAP of 5.71. Support is at 5.61. Resistance is at 5.86. Megaworld has been in a consolidation phase since the last week of March 2019. So there is a struggle. There is a struggle to cross above the resistance of 5.86. But just in case, Megaworld will gather enough upward momentum and breaks out above 5.86, the psychological resistance would be, so I plotted the 61.8% Fibonacci extension, and the psychological resistance above 5.86 is pegged near 6.33. Okay, take note of that. Nonetheless, MACD remains bearish. I don't see any sign of any reversal or any bullish convergence with the signal line. It's still busy moving to the bottom. See that last trend line? Foreign investors are net foreign buyers on Mega World, by the way, for 2019 year to date. Okay, consider that as well in your, especially for the long-term investors. Okay, I just want to reiterate that this video is for short-term trading. Everything that I'm saying here, including my overall sentiment and recommendations, are for short-term traders, not for long-term investors. If you are a long-term investor listening to this video for short-term trading, and you are expecting a piece of advice for long-term investing, this video is not for that purpose. Please take a look at our long-term investing tab in your account. If you have follow-up questions, post them inside our private clients forum. The instructions on how to post in our private clients forum are written inside the quick start guide here. Go to your My Account and then click on here for the quick start guide. So let's take a look at the price and volume distribution for Mega World. Wow. On the volume distribution chart, it looks evenly distributed. On the trade distribution chart, 5.78 is a dominant price point, followed by 5.69. So if I were to nominate a range, I would select 5.7. Let's give the score to 5.78 all the way to 5.68 to 5.78, 10-point mark. So 5.68 to 5.78. That's the most traded range, most traded and most voluminous range of Mega World. And my overall sentiment remains bearish on Mega World. There's still a possibility for this stock to just trade sideways between 5.61 to 5.86. So if you are into short-term trading, I would suggest that you wait for a breakout above 5.86. When a breakout is spotted with volume, strong volume above the 10-day volume average, and if all four criteria are present, that would be a good strategy to buy on breakout. When that happens, not now. Okay. Next, we have JGS, another blue chip stock, index stock. JGS closed on Wednesday at 61.35, closer to its support at 60.46, far away from its resistance near 69.62. JGS closed below its VWAP of 62.03 on Wednesday. It's already moving below its 50 SMA, therefore, it's no longer a trending stock. It's no longer an upward trending stock. Okay, that has been broken. That trend has been broken after the first week of March 2019. So the uptrend was broken on that week. I mean, MACD is already moving bearishly below the signal line. There's no formation of a bullish convergence with the signal line. It's still moving busy and bearishly moving below the signal line. Historical volatility, however, is at 39%, a low risk level for JGS. Foreign investors are bullish on JGS for 2019 year to date. Okay, let's take a look at the bigger chart. So this 69.6 resistance level here is a tough one for JGS. As we can see here, it made some attempts to break out above this line last in the last week of February this year, but those attempts were all unsuccessful. Okay, they were all unsuccessful. So if JGS won't continue to move sideways between the support and resistance level, it might just break down below 60.46. Okay, just in case the investors won't be able to sustain its position above 60.46. So when it breaks down below 60.46, it would be more likely for JGS to retest another resistance level, especially 51.13. Okay, so let's take a look at the price and volume distribution for JGS. The most traded and most voluminous range is registered at 61.35. Is an outstanding single price point, by the way. But range-wise, I would pick 63 all the way to 63.35, with the exemption of this standalone price point at 61.35. I don't think this is a cross trade because the number of trades was at 69%. So this is not a cross sale. Okay. So what would be my overall sentiment then? I'm still bearish on JGS, and my recommendation for short-term traders, don't buy JGS, just wait for it to kiss the support line at 60.5. Okay, better if below 60 pesos. Okay, next we have VITA. VITA closed on Wednesday at 1.46. Like what I've mentioned in my previous videos, I tackled VITA there. I told you in those videos to wait near 1.36. And so far, that recommendation proves to be correct as it continues to move downwards day after day. MACD is still already moving below the signal line, and volume is still bearishly moving above its 10-day volume average. All SMAs, the SMAs have already registered a perfect bearish alignment already. So that adds up to the weight of the bears that pulls the price downward closer to the support at 1.36. Historical volatility is at 78%. It's a moderate risk level for VITA. Let's take a look at its price volume distribution chart. The most traded and most voluminous range is between 1.45 to 1.5. 1.45 to 1.5. It's a break even. It's another sign of an indecision, a tug of war. But given the position of the candlestick on this chart, I would give the VITA a bearish overall sentiment, and my recommendation is that you wait for a pullback at 1.36. It doesn't mean though that you should buy right away once it touches 1.36. As always, reevaluate. If you cannot reevaluate on your own, I'm just a message away from our private clients forum. Okay? So my overall sentiment is bearish. Don't touch VITA just yet. Don't touch it yet. It's still more likely to continue moving to the bottom. Okay, next we have DNL. DNL closed on Wednesday at 11.24, obviously below its VWAP of 11.37. Support is at 11.15. Resistance is at 11.9. This one is already moving below its 50 SMA, therefore it's no longer moving in an uptrend direction as far as medium-term horizon is concerned. Volume is relatively, there's no liquidity issue in DNL, by the way, and foreign investors are bearish on DNL for 2019 year to date. MACD, meanwhile, has already registered uh, a bearish divergence with the signal line. It's about to cross below the signal line. It's a confirmation of a bearish trajectory of DNL. Next support below 11.15 is 10 pesos per share. I think it would be attractive. DNL would be more attractive for me to consider doing a test buy once it hits 10 pesos per share, provided the four criteria are present, of course. Okay, for the price and volume distribution chart, so I would pick 11.24 to 11.54. That's the most dominant range. And that's closer to the intraday low than the intraday high. That's another confirmation of a bearish direction of DNL. Therefore, my overall sentiment is bearish, and my recommendation is don't touch it yet also. Wait for it to settle down either at 11.15 or to continue its downtrend below 11.15 towards 10 pesos per share. Okay? Let it do its thing. Let it get tired of registering a price lower than its prevailing price. Once we see some exhaustion, then let's reevaluate and see if it's logical to enter or do a test buy. But not now. Not now. Okay, next we have PXP. Last in the list. PXP closed on Wednesday at 7 pesos per share. That's below its VWAP of 7.05. Resistance is at 7.55. Support is at 5.11. It's struggling to break out, to go back above its resistance at 7.55, as you can see here. Okay, it goes without saying that the simple moving averages they do have a perfect bearish alignment. MACD still it continues to increase the gap from the signal line in favor of the bears. It's still busy moving to the southward direction. There's still no signs of a reversal despite the position of the RSI within the classical oversold territory. So it looks like PXP traders think that PXP is not yet oversold at this level, huh? What do you think? That's what I think. Now, for the foreign investor sentiment for 2019 year to date, they are bearish on PXP. Okay, price volume distribution. Let's take a look. So, the most dominant range of PXP for today is between 6.9 to 7.1. Again, it's closer to the intraday low than the intraday high. 6.9 to 7.1. My overall sentiment is bearish, and the only interesting that I see on PXP is the act of waiting at 5.11 from 7 to 5. Let's see from 7 to 5. Let's see if that will happen. I think traders some are still hopeful for PXP to regain its position above 7.55 or 7.7.5, but the support coming from the other buyers is not enough on PXP. So don't touch PXP yet. Wait for a deeper or a cheaper price on PXP, preferably below 7 or closer to 5 pesos per share. So there you go for my technical analysis, overall sentiment, and trade setups for these 10 stocks for today. If you have questions, please ask inside our private clients forum. I'll be posting a thread for this video shortly. Again, my name is JC De Guzman, and I do hope I have been able to help you, learn how to trade independently and become a better investor as well. Have a great day. Enjoy the rest of the week and have a peaceful and relaxed Holy Week. Thank you and enjoy the rest of the week.